Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Tuesday, February 11th. Just pre-recording this before I head out to work. And yeah, so we're going to start here looking at the UVIX, which is the 2x long VIX futures ETF, which came down by 5% yesterday, closing the day at a price of $28.32, but bouncing about 30 cents or so in the pre-market. And so what we can see here looking at the daily is let's see, did come down. Actually, sorry, I was looking at the green candle here. It looks like, yeah, I'm curious to see if we head back into the 27s. Do have an alert set here, as I do think over the course of the next week or two, the UVIX as well as the VIX will be heading lower, and so I could see that UVIX coming down to, as low as right around $25 a share, but we first have to break into the 27s, so we'll have to wait and see. And just taking a step back, we can see this light blue parallel channel that following this big move from August 5th, we have been trading in this downtrending channel, and getting to 25, that would not even be testing the bottom of it, so I could see it going even lower, but it might just be kind of a steady fade lower. But anyways, if we do switch over to the 10-minute time frame, we can see how the price action, traded yesterday during market hours, as well as getting into the after hours and then gapping up into the pre-market. Doesn't look like it's been testing any of the levels that I have drawn here. This one at 27.42, which was a previous gap that has since been filled, although not here on Friday on 27.44. Was the low. Actually, maybe that gap was not filled. Nope, it was filled over here on the 31st of January. And so there's that level, and then to the upside at 30. I don't think that we're going to be testing that. As you can see, we have been forming lower highs as well as lower lows. I think that we're going to be testing some new lower lows again, like I said, right around $27 a share. But then if I do flip over to the VIX, this is the volatility index, closed yesterday at a price of $15.81, being down a little bit less than the UVIX by about 4.4%. Currently is closed, as this does not have pre-market or after hours trading. But if we do look at the chart here, we can see where it flipped over to Monday's trading at market open. And it looks like the UVIX just kind of headed down over the course of the day with a little bit of a bounce in the middle there. And we could actually draw a Fibonacci retracement up on this just to see where this could be going. And yeah, it does look like there has been a 50% retracement, could be coming down to the 618 at 1550, or what I feel like is probably more likely coming down to the 786 at 1519, or for a full retracement, getting back to this previously filled gap that is at a price of $14.85, or coming to breaking below this low at $14.79. This has traded lower than that, I believe, around $12.70. If I do flip over to the daily chart, we can see this yellow line here, yes, at $12.70. That was the low from December 6th, just a couple weeks before we got this big move up. This green candle looks like it was a 74% move on December 18th. But you might notice too that I do have this white downtrending line there, and so price could be coming even lower than 1270, maybe even getting down into the 10s. Got this orange line drawn here at 1062, which was the low before the big move on August 5th. So yeah, lots to keep in mind with this one. I do think that the VIX, as well as the UVIX, will be fading over the course of the next week or two. So I'm going to be looking for some dips on the UVIX. And then now if we switch over to the SPY, this is the S&P 500 tracking ETF that went up by about 0.68, almost 0.69% yesterday, closing the day at a price of 604.85, but then trading down by nearly $2 in the pre-market. And this one, I kind of talked about it last week, but, of course, I never have any idea what is going to happen. I'm not a fortune teller, but I was just kind of noticing this repeating pattern of going up over the week, closing on a Friday red, gapping down on Monday, going up, bearish engulfing candle, gapping down on Monday, and then we saw another big red candle on Friday, February 7th. So I think a lot of people were expecting a gap down, this pattern to be repeating, but when a pattern becomes very obvious and everybody is talking about, oh, there's going to be another gap down, we're going to see this come down and then retest and a bounce. When everybody's talking like that, it becomes less likely to happen. And so what we saw yesterday is actually a break of that pattern. But that doesn't mean that we're not going to see another retest of this yellow downtrending line, which was resistance over here. It looks like, for the month of December and into the beginning of January, that downtrending line was resistance until we broke above it, hitting new all-time highs and then forming consecutive lower highs as we consolidate below this trend line here. And so I have this little doodle here suggesting that we could be going up to around 608, maybe getting rejected there before bouncing, testing that downtrend as support before we make new all-time highs. But this also could break down. It does look like we have the 21 and 50-day moving averages here just below this previously filled gap at 601.82, or right around $600. The 21-day moving average is at $599.12, whereas the 50-day moving average is at $597.87. So I do think that we could be seeing a pullback to around $600 before we bounce higher, or break down. Like I said, we could be coming down to this downtrend again, but maybe there's just a delay, kind of teasing people with this pattern here not playing out. Then everybody thinks it's going to go to the upside, but we just get a few day delay before we break down to like 590 or maybe 580 here. But yeah, switching over to the 10-minute time frame just to kind of see how we were trading yesterday. Does look like we got rejected from this very casual downtrend that I have drawn up there. The high from yesterday was 605.50, got rejected there, now trading around 603 in the pre-market, and then you can see that line there right around 602 that we could be retesting. And, we also do have this level up here at 608. So I would expect that to be kind of the range that we trade in. If we basically close below 602, seems like it's probably going lower, but maybe there's a fake out or a bounce from that level, and then it goes up to 608. And then maybe on to new highs. Switching over to the SPX, this is the, I feel like a better way to track the S&P 500, but I just think that the numbers are a little less accessible given that it is over $6,000 a share now, having closed yesterday on the 10th at a price of $6,066.44, being up about 0.67%, whereas the SPY was up, a fraction of a percent higher at 0.68, nearly at 0.69. And so what we can see with the the SPX, which does not have pre-market or after hours trading, let's see here. We do have what looks like a gap up not a gap down to start the week, and then kind of progressively making some higher highs on the day. And yeah, it does look like we're putting in higher lows as well. So we'll have to see if that can hold as support, if we can be breaking higher to around $6,100 or higher here, marked at $1.24. Which I believe, let's take a step back, was not the all-time high. Looking at this on the daily time frame, we can see that the all-time high was at a price of $6,128.18. I suspect that perhaps in the next couple of weeks, perhaps by the end of February, if not into March, we'll be making new all-time highs. I think generally we are going to be seeing markets testing new all-time highs, so that is what I am looking for. Word 2. Also wanted to look at uranium. This is URA, the Global X Uranium ETF, which I'm very intrigued by this because it has been trading in this uptrending channel, which I might extend one more day, might extend to include Tuesday once the trading for the day opens, which it does look like it has for pre-market, but I like to look at the dailies, which does not include pre-market or after-hours pricing. But anyways, closed yesterday at $29.10, being flat on the day, going up a little bit, but then getting rejected to close at the same price we saw close on Friday. And yeah, in the pre-market down about 13 cents, just below $29 a share. And so what I could see happening with this, following this gap down into a red candle day, this to me looks like, we're going to see effectively a falling three methods, although we've got a lot more than just three candles in the middle here. And, we kind of saw that over here, but a slight rejection, but then a bounce from this uptrend. And so, yeah, I could see this breaking down, as I do have illustrated with this purple line. I think coming down to around $25 a share, or maybe $24.50 or so, based on some Fibonacci retracements that I've drawn up here, this extension here to $24.68. I think that this is going to be breaking down, and when that does happen, when we do get around 25, I think that would be a good time to consider looking at uranium and or nuclear stocks, not necessarily this ETF, because my understanding of it is not that well of a managed fund. But I think I maybe heard that from, I don't know, I want to say the All In podcast, but it probably wasn't that, because I don't think they would have been talking about URA, but maybe they were talking about uranium, nuclear. That would make sense for them. So maybe this did come up. But yeah, one that has been brought up as being, an interesting nuclear play has been OKLO. This is down about 3% yesterday. Closing the day at 53.73. It is bouncing a little bit by about 24 cents in the pre-market. But yeah, did get up to, the 3618 Fibonacci retracement here at 56.87, having hit a high on Friday of 59.14. I am very curious to see where this might be pulling back to. I would be getting interested in the range from around 33.50 down to around 28.26. But we'll have to see. And one thing that I'm realizing I forgot to look over before getting into stocks is Bitcoin did close, is currently trading at a price right around $98,000. And did put in, or are putting in, kind of a spinning top doji there with a kind of a bigger wick to the upside. So maybe we do start to see this pull back. And I would like to see it holding above this line right around 96,350. But that is just kind of an approximate line. Do you have this downtrend that does look like we have broken out from? We got some wicks above it, but no closes above it, until seeing the price closing on the 10th above that level. But this is not based on GMT, so the time is a little bit off, and so that close may actually I think no matter what, the close would be above that downtrend. So we'll have to see if we pull back and retest it. This downtrend and that line at 96,350 before we get a bounce and perhaps getting back up to around $102,000, $103,000, maybe getting back to these prior highs that we were hitting on December 17th. Right around, let's see, actually, no, we did go higher than that on January, I believe, on the 20th, hitting a high of around $109,000. So let's see, can we get up to 110? I've been hearing a lot of people talking about the potential for it to come down to 70Ks. But for me personally, I've learned the hard lesson with Bitcoin. While it might be coming down to 70K, I am not going to be waiting for that to happen. And if it does come down to that level, I would be happy to be adding more aggressively down there. But to wait for some of these levels to be hit could be foolish, because maybe we hit 110 and then get up to right around, 118. And then you're left not holding anything because you are waiting for 70Ks. I think it's good to be DCAing. I do a $5 DCA every day, which is super boring, but it does help build a position, and very non-emotional about it as well. But we do have this uptrending level that's based on the pivot lows from January 13th as well as February 2nd. So I would like to see that hold if we do break down, maybe to test 94, 93,000. I would think that we would want to be holding above 92 to be still holding higher lows, because the low over here on February 2nd was right around $91,350. So don't want to be breaking lower than that. And if we do, maybe we come down to around 86. So keep that in mind. And then one ticker that I did want to go over just for fun. This was requested, I think, during Friday's pre-market prep when I was streaming last week. And this is Pacific Biosciences, or PAC Bio, ticker symbol PACB. And so I had kind of drawn this following wedge pattern, and it looks like actually this was probably requested on Thursday of last week. Not exactly sure I think it would have been Wednesday, actually, on the 5th. Because I was talking about the possibility of this getting rejected from this downtrend. Maybe it was on Thursday, I don't really know. But I was suggesting that maybe it was on Friday. Again, I am not really sure. But I was suggesting that we see a pullback to test this downtrend that we see here. And on Monday, we did get a pretty massive, nearly 15% down day, closing the day at a price of $1.33. So I had this alert here set at $1.39, corresponding with, I believe, the wick low from over here. Let's see, that's 141. Yeah, oh no. So that must have been... what was the low from February 4th, maybe? 139. So I just had an alert set there, thinking if that alert does get hit, we would then be putting in, a lower low here following this, falling wedge pattern. And so what we are seeing here with the new low breaking this line at 132, that this might be a fake out before earnings, which will be reported on Thursday the 13th. Not sure if it's before or after earnings. But I feel like this is a nice dip buying opportunity, and that we will be seeing another test of the top side of this wedge, perhaps coinciding with earnings. And so the top side of that wedge would be a price right around $1.67. Maybe if we do get back up to that level, we get a little bit of a rejection before a breakout getting into the twos. And so what I did yesterday, not financial advice, could be a bad decision, who knows. I sold a cash secured put for a premium of 20 cents, which brings me $20. and that put was at a strike of $1.50. So if we do look at the options over here, looking at puts, this expires February 21st, $1.50 put. We can see that to buy one of those, or sorry, to sell one of those would be to collect a premium of 10 cents as of right now. And so I had sold that for 20 cents. Looks like I'm up a little bit, but price is currently 17 cents lower than $1.50. So it's quite possible that we'll be closing in the money, meaning below $1.50, and so I might have to buy 100 shares at $1.50, but having gotten that $20 discount, my buy-in price would effectively be $1.30, which is a low we have not hit yet, and we are currently up about 6% in the pre-market, getting a nice little bounce there, having gotten as high as, up 11% in the pre-market, cooling off a little bit, back at this white line here, right around 139, pre-market trading around 141. So yeah, I'm intrigued by this. I'm hoping to just collect that premium of $20. But if I do pick up 100 shares, I'm sure I'll be able to sell them at around, maybe 165, corresponding with the top of this wedge before a rejection and then a breakout. And so, yeah, I'm just intrigued by this. I think the chart's looking cool, so I just wanted to share that with you guys. But anyways, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more pre-market preps and videos like this. Thanks a lot, and have a great Tuesday trading. Take care, you guys.